Assalamualaikum and hello everyone. I am Zinira binti Muhammad Noor with matric number 267918. Today, I will talk about the big why, a proper set financial statement which are statement of profit or loss, statement of changes in equity, and statement of financial position are useful in managing a company. One of the reasons why a proper set of financial statement is important because it can explain about the profitability, equity or ownership, financial position or status, and cash operation of a company. Second reason, because it is usually intended for users of financial information based on the recorded transaction of a company. Easy for people who interested in that company to know about the financial information of that company. Lastly, the importance why it is important because it contains significant information about a company's financial health and help company make the right decision since they already highlight which areas of the company provide the best. Easy for the company to improve each year since usually companies file financial statement once a year. That's all from me. Thank you.
Good day, I bid to Dr. Sohini and my fellow friends. I'm Sharmila Devi. My matrix number is 268089, and today I'm going to talk about the importance of adjusting entries. So, firstly, adjusting entries bring the account balances current as of the last day of the month. An example of adjusting entries includes recording of wages for the last days of the month which employees have not been paid yet. Another example would be to record the electricity used through the end of the month even though the bill has not been received. Secondly, adjusting entries allow the accountant to communicate a more accurate picture of the company's finance. A financial statement prepared without considering adjusting entries would misinterpret the financial health and company. Thirdly, all adjusting entries include at least a nominal account and a real account. A nominal account is an account whose balance is measured from period to period. A real account has a balance that is measured cumulatively rather than from period to period. So that's all from me. Thank you.
A very good morning to Dr. Sohimi and my fellow friends. My name is Saranya Velu, matrix number 270635. Today I'm going to talk about possible account adjustments. To see about depreciation of non-current assets. Okay, depreciation of non-current assets means a deduction in the value of an asset over time. Depreciation of tangible non-current assets, for an example, long-term assets which can be touched such as machinery, motor vehicles, fixtures and buildings. So building which we can find in the automobile workshop, there is a non-current asset, the building. So the building are depreciated as they can fall in disrepair or become obsolete. So in our discussion we can see that the building which is a non-current asset, there is a possibilities can depreciate it since it can fall under disrepair. So the value of the asset over time is reduced. About accurate account adjustment. So there are two type of accurate account adjustment, which is accurate revenues and also accurate expenses. So first we are going to see about accurate revenues. Okay, Accrued revenues are unrecorded revenues that have been earned and for which cash has yet to be received. So revenues have been earned, but the revenue has not been recorded or nor has cash been received. No journal entry has been recorded even though revenues have been earned. So there is possibilities in our financial statement for automobile workshop where there is accurate revenues. But however, at the end of the period, adjustment is needed to recognize accurate revenue. So the possible account adjustment will be an asset account is increased for the amount of the revenue that has been earned and the related revenue account is increased. For example, automobile workshops accounts receivable will be debited for fees earned. Interest receivable will be debited for interest earned. Okay, then we can see accurate expenses. Accurate expenses are unrecorded expenses that has been incurred and for which cash has yet to be paid. Wages owed to employees at the end of a period but not yet paid are an accurate expense. An expense, example wages expenses, has been incurred but the expense has not been recorded nor has cash been paid. No journal entry has been recorded even though there is a expense has been incurred. So there is possibilities wherein automobile workshops financial statement have accurate expenses. So at an end of the period adjustment is needed. Okay, the third possible account adjustment will be provision for doubtful debt. Okay, the provision of doubtful debt is an estimation of the amount for doubtful debt that will need to be written off during a given period. It is a provision for debt that are considered to be doubtful. So there is a possible account adjustment in automobile workshop to include the provision for doubtful debts on company's balance sheet to give a comprehensive overview of the business. Otherwise, the automobile business may have an inaccurate picture of the amount of working capital that is available to it. Okay, next we can say the possible account adjustment for automobile workshop will be withdrawal. Okay, when an owner withdraws money from a company for personal use, the company takes this out of its share of capital. This makes sense because the owner is essentially cashing out his share in the company. He is receiving cash in exchange. The company is buying back some of his capital. The company will record a journal entry for an owner withdrawal by debiting owner's withdrawal and crediting cash. Owner's withdrawal is a temporary capital or equity account that is close to the general owner's capital account at the end of the year. So there is a possible account adjustment where the owner of the automobile workshop maybe withdraw the money from the owner's equity for his personal use. Okay, finally we are going to see about possible account adjustment, which is also known as discounts, which is not given or not claimed. Okay, cash discounts arise when an entity is to reduce the invoice price of an item for immediate payment at the time of sales. Both of these discounts are reflected as deduction from the purchase price from the purchase invoice. As they are granted at the time of purchase and are known with certainty, such discounts reduce the cost of goods purchased. They are not recorded anywhere in the accounting system and only the net figure after deduction of such discounts contributes to the cost of good purchased. So there is possibilities that automobile workshop given some discounts. So that's all from me. Thank you so much.
Hello, this is me, Ashraf, metric number 270076. So for this part, I want to present about the financial statement for automobile workshops in Sdn Bhd. There are three types of financial statement, which is a statement of profit or loss, statement of owner equity, and statement of financial position. So firstly, I want to present about the statement of profit or loss. The statement of profit or loss reports the revenue and expenses of a period time based on the matching concept. The matching concept is applied by matching the expenses incurred during of a period with the revenue that those expenses generated. The excess of the revenue over the expenses is called net income. But if the expenses exceeds revenue, it's called net loss. So, for the statement of profit or loss for the automobile workshop, we got the net income of 76,570 ringgit. Secondly, the statements of owner equity. The statements of owner equity reports the changes of owner equity for a period of time. It is prepared after the statements of profit or loss because the net income or net loss for the period must be reported in this statement. Similarly, it is prepared before the statement of financial position because the amount of owner equity at the end of period must be reported in the statement of financial positions. So, the statement of owner equity for automobile workshop, we get the owner equity amount to 255,570 ringgit. Lastly, the statement of financial positions. A statement of financial positions is a list of the assets, liabilities, and owner equity of a specific date. The account form of a statement of financial positions is the list the assets on the left sides, while the liability and owner equity on the right side. It resembles the basic format of the accounting equations. So, for the statement of financial positions for automobile workshop, it is reported that the total assets equals to total liabilities and equities, which is amounted to 291,570 ringgit. That's all for the financial statement for automobile workshop.
I'm Ashley Lynn Bennett, matrix number 269433. In conclusion, as the account executive team for Automobile Workshop Sendirian Berhad, we had discovered that there are some minor mistakes that had been made by the previous account executive that had created many errors in the financial statements. Financial statements are vital in any business so that the users of the information are able to make important decisions. So when errors are present, it makes the decision-making process difficult. To correct the errors that we had identified, we have presented several possible adjustments. The possible adjustments that were found in the financial statements of Automobile Workshop Sendirian Berhad are depreciation of non-current asset, accrued account adjustments, provision for doubtful debt, withdrawal, and discounts that are not given or claimed. Adjusting entries allow the accountant to communicate a more accurate picture of the company's finances. As a team, these are the errors that we had found, and we have made the adjustments accordingly. Thank you.